So now we're going to talk a new concept for property, plant and equipment, and that is about component accounting. Now this concept is very, very important for you to understand because this is a new concept which has been introduced in the accounting framework through Ind AS. And Ind AS 16 provide comprehensive guidance as to how do you need to deal with componentization, how do you deal with this from a perspective of capitalization, and then how do you deal with this from the perspective of computing depreciation in relation to such component. So the question for us is, what is component, right? So component is cost of each significant item or property, plant and equipment is required to be recognized if it has a different useful life. And we will try and understand this with a lot of examples that what does this mean? What is the meaning of this statement that a property, plant and equipment which is a different useful life? And let me give you a very, very simple example, right? So let's say you purchase a car, right? Now when you purchase a car, then there are several components which come together to make it a car, right? So whether they are, let's say, tires, there's an engine, there's a body, etc., etc., right? So the question is that do I need to treat car as one single unit of account and then appropriately determine the useful life and depreciate it? Or I need to capitalize the tire separately, I need to capitalize the engine separately, and I need to capitalize the body separately, and then deal with them appropriately from a depreciation perspective, disclosure perspective, etc., etc. And that is where the concept of componentization is very, very important for us to understand. So we got to look at the cost of each significant item. So what the standard suggests that we don't need to start looking at it from the perspective of every nut and bolt. So we have to look at it from the perspective of cost of each significant item, means parts having a cost that is significant to total cost in relation to that particular asset. Identification of such part needs to be recognized as replacement cost if required. So if you were to change it, then we have to again deal with that appropriately. And we're going to try and help you understand this with the help of a very, very simple example, which is to say that there is a ship, right? And the cost of the ship is INR 150 and the useful life of this is 10 years, right? The cost of the ship is 150 and this is and its useful life is 10 years in that sense, right? So the docking cost is INR 15. So there's a docking cost of INR 15 which is planned after 3 years. Now the question is that how do I do the capitalization and do I have a component here? So the total cost which I have incurred here is 150, right? And what is the docking cost here? Docking cost is 15. What does this mean? Is the cost of one component is 135 and whose life is 10 years, and the total cost of the ship is 150, and the component 2, which is the docking cost, is 15, and the life of the docking is 3 years. And that's what we're trying to say. So same asset which costed me 150 rupees and its life of 10 years, but based on the available information, I need to also incur docking cost after 3 years, and that cost amounts to 15. So what the standard requires me to actually break the total cost, which is 150 into 135 and 15. And why this is important for us to break is because the life of the ship is 10 years, whereas the life of the docking as an activity is only 3 years. And for me to then appropriately determine the depreciation cost, I need to break this. And we're going to try and understand, let's say, with the help of an example for a building, right? So when you look at different components of a building, which has a main shell, it could have several other things like an HVAC system, which is air conditioning system, or an interior finishing, or a roof covering, or elevators, or electrical and lighting systems, or floor coverings, or plumbing system, or fire protection system. So one building, and it has multiple other things which are coming together to give it a comprehensive shape and form in which it can be used by the users in that building. It is not necessary, again remember, it is not necessary that we need to break now building into all of these components. Okay, we need to break this into multiple component if the value of the component is significant, and of course the what is significant is not defined in the standard, so it's a matter of judgment, right? It's a matter of judgment. So the value has to be significant, and the life of that component also has to be significantly different than the main asset. So for example, if I have, let's say, a roof covering here, and the life of the building is, let's say, 25 years, and the life of the roof covering is also 25 years, then I am not supposed to separate it, because it doesn't help or give me any additional objective or purpose as to why do I separate this, because my depreciation cost will be one and the same. And also for the purpose of disclosures, the components are not separately disclosed, right? Components are added and disclosed together as part of the main asset itself, right? So there is no reason for me to separate it if the value is insignificant as compared to the main asset, or if the life is not significantly different as compared to the main asset in itself. So that's the whole concept around componentization. So we got to look at the main asset, and then are there subset to the main asset, and if there are subset to the main asset, then I need to determine is that subset is significant in value terms compared to the main asset, and the life of the subset is also significantly different than the main asset. If the answer to both of these concepts, both of these component is yes, then you have to identify that component and capitalize them as a separate unit of account, so that your depreciation cost is appropriately determined. So to summarize, from the perspective of the componentization, you got to look at the useful life of component, you got to look at the replacement cost, you got to understand the materiality of the significant component, and you also look at major inspection and overhaul. So we're going to further try and help you understand all of this with the help of several examples. So let's look at a subsequent cost which has been incurred in relation to replacement of an existing part. Now the question we often struggle is that this replacement, should I expense this replacement, or it is an additional capital expenditure, right? And hence I should capitalize this. So depending upon the materiality of this replacement cost and the relevance of this replacement cost in relation to that particular asset. So a simple test is what we look at, that whether this replacement is actually akin to a maintenance, okay, or this replacement is actually going to result into increasing the life of the asset, or it's going to increase the efficiency of the asset, so on and so forth. So you got to look at what is the purpose of this replacement, and there was the size of this expenditure which has been incurred by the company. So for you to make a distinction between whether it's a maintenance cost or it is type of a capital expenditure, because if it is maintenance cost, maintenance is like a period cost, right? The moment you incur a maintenance cost, you are required to charge it to the profit and loss account. Now we're going to look at this as a replacement cost. So there are some items involve a series of linked parts which require regular replacement, right, at different intervals and have different useful life. So how do I deal with this? Recognize the cost of replacing a part in the carrying amount if recognition criteria are met. Now what are the recognition criteria? That cost is reliably measurable, and there is a economic value, there's output, there's economic outcome which has been achieved by doing this replacement, or it is valuable from an organization standpoint perspective. Now the carrying amount of the replaced part is derecognized. Now this is also very, very important for you to understand. The carrying amount of the replaced part is derecognized. Okay, so let's say there's an asset carrying value was 100, it has a component whose carrying value was 10, and then you have, after let's say 3 years, you have replaced that component and you've incurred a cost of 15. then and then you need to determine what was the carrying value of the part which has been replaced. You got to de-recognize that because that no longer exists, and then you got to capitalize the new cost which you have incurred, provided it meets the recognition criteria or the capitalization criteria with reference to that particular asset, and when it will meet, if the cost can be reliably measured, and also there is going to be enhancement in the outcome as what can be generated from that replacement. In that sense, there are examples like a furnace may require relining after a specified number of hours of use, or aircraft interiors such as seats and galleys may require replacement several times during the life of the airframe. So they are very, very simple examples which we see across different industries and sector, and we're going to try and understand this with some more example. A very common example of componentization which we see across some of the industries is major inspection and overhaul cost. So when you look at a major inspection and overhaul cost, performing regular major inspection for faults regardless of parts being replaced or not may be a condition of continuing to operate as an item of property, plant and equipment. So each of these costs are major inspection performed is recognized in carrying amount as a replacement if the recognition criteria are met. Any remaining carrying amount of the cost of previous inspection is de-recognized. As I explained, that you got to look at the overhaul cost as a separate component, and then you got to capitalize that component as part of the main asset in itself. You need to determine how much amount I need to allocate to that component, and then reduce that amount from the main asset itself or the total cost of the asset. It's not an amount which is to be capitalized over and above of the total cost what you have incurred, right? So in the example that if you have incurred 150 rupees is the cost of the purchase of the ship, and 15 is the docking cost, then the cost of the ship is reduced 15 from 150, and then you capitalize 135 as the shipping, which is to be depreciated over 10 years, and 15 is to be depreciated over 3 years. You don't do it to increase the cost of the ship from 150 to 165, right? Now, some of the people may argue that why are we not increasing the 165? Because end of the day, the total cost which you have incurred is 150. So you are not, because the moment you will take it to 165, then what will happen? You will also be required to record a liability of 15. Now that method is not acceptable. Because why that method is not acceptable? Because the liability of 15 which you intend to recognize is not a present obligation or is not a contractual obligation. Since it is not a present obligation, it doesn't meet the definition of liability, and hence you are not allowed to recognize that from an accounting standard perspective. So you have to record this component by subtracting this from the total cost of the asset itself, right? Interesting concept we've been talking about the inspection and overhaul, whether how they become in a way a component, right? So let's try and understand this with the help of an example. So Titanic Limited, not the same Titanic, I hope, right? So Titanic Limited operates in shipping industry. Okay, Titanic operates in shipping industry. As per the laws of the country, it is required that all the ships are brought to the dry dock for a major overhaul and inspection after every 3 years. Okay, they are brought to the dry dock for a major overhaul and inspection after every 3 years. All right. Such overhaul and inspection expenditure at first seems to be repair and maintenance expense, but in a sense represents cost incurred to make the ship back to the seaworthy condition, right? So I think the point we're trying to make here is that overhauling, which is let's say a requirement in some of the industries, right? Or you may do it at frequent interval for a large complex plant and machinery, then that overhauling is actually become a component. You got to factor this at the time of capitalization itself, right? So essentially what we're saying that the cost must be capitalized and balance left that was capitalized at initial recognition in relation to major overhaul and inspection needs to be decapitalized. We'll again further understand this with the help of a better example, with the help of some numbers and all as to how all of that needs to be done. But the important thing for you to remember or understand is that if there are inspections and overhauling costs, right,
they're not necessarily always to be classified as repair and maintenance. You got to understand what is it I have done at the inception, whether I've assessed this appropriately, and then I got to break the cost of the plant itself into the normal plant and the inspection and overhauling cost, and then do the capitalization. It has an impact on my depreciation, and then the future overhauling. All of that to be dealt appropriately. All right. Let's try and understand this with another example. Okay. So let's look at this case study in relation to major inspection and overhaul with some numbers now, right? So Aviation Limited operated in the airline industry. It has purchased an aircraft at a cost of INR 9 lakhs. As per the aviation rules in the country, it is required that major inspection of aircraft is carried out every 3 years, the cost of which is currently INR 20,000. Okay. Now, Aviation Limited carried its first major inspection at the end of 3 years at an actual cost of INR 22,000. This is always right. The actual and estimates do differ. So the question here is that accounting treatment, how do you do at inception, right? And how we will do it subsequently, right? From that perspective. So, so essentially, when you are looking at a major inspection overhaul, as I said, it's considered as a component. So you got to look at the 9 lakh total cost, split it, capitalize the component separately, and determine and which so that it's still the total cost, right? And then when you actually incur that overhaul, and you depreciate it over its useful life, which is 3 years, and then you got to de-recognize this and recognize the new cost, right? Which will again be subsequently be amortized. That's a broad, in a way, accounting principle which you need to remember. So from a solutioning perspective, the original carrying value should be allocated to components as follows: aircraft 8,80,000, cost of major inspection 20,000, total gross cost is 9 lakh. Now, if I were to reassess my gross cost after the after the first major overhaul or inspection, so at the time of the inspection, the original cost of the inspection will be de-recognized, and this also must have been, this needs to be 3 years depreciation, right? But we are just talking about the gross. We're not focused on here the amortization charge, and the new inspection cost will be capitalized to the carrying amount of the asset. Therefore, the new inspection costs are accounted as a capitalization of subsequent cost, and the original inspection cost as disposal of the assets. So here if you see, so 8,80,000, original 20,000, which reconcile to this, and then I'm going to decapitalize this 20,000 and record this new item, and so my total gross cost has now become 9,02,000. So this 22,000 is again going to be depreciated over a 3-year period, and this 8,80,000 is anyway getting depreciated over its estimated useful life, of which the information we don't have here, right? We don't have this information as part of this question. All right.
So for me to summarize what we have talked so far, right? For recognition of property, plant and equipment, you need to look at the reliable measurement. You need to also ensure that the future benefit, right? For me to understand that what all costs which are supposed to be capitalized, you got to look at the direct cost, which is the purchase price. Then there are directly attributable costs, and then there are dismantling or restoration costs. All of them are also required to be capitalized. Then you look at costs which are to be excluded, right? Which is not supposed to be capitalized. And the costs which are not supposed to be capitalized is, we talked about the general administration cost, the relocation cost of employees, for example, the marketing cost, advertisement cost, training cost. They are not supposed to be capitalized. And then you look at the subsequent cost, right? And we talked about subsequent cost. We need to see that whether they qualify as capital item or they qualify for as maintenance. If they are maintenance, then you go to expense it as incurred. If they qualify as a capex, when they'll qualify, again you go back to the recognition, whether they are reliably measurable and the future benefit is probable. If the answer to that is yes, you're going to capitalize them as a major overhaul cost or a replacement of component. And once you do that, you got to capitalize and you got to de-recognize the existing capitalized component. If you were to capitalize the same component again, the existing component has to be de-recognize.